Excuse the fit of rage, but welcome to Market Watch Mondays. This was designed to talk about news going on in the market that would dramatically impact us, or at least be something that we can talk about and, ask general questions. This past week in the market has been the most controversial week in my entire life. And I've seen the market through COVID. I've seen the market through wide outspread of pessimism. I've seen the market recover from COVID and go back down. But this week alone has been so... I can't even think of the word, but just so surprising. But we're going to talk about it today. If the year 2012 and you're trading in your Xbox 360 or your PlayStation 3, you go to a local retailer named GameStop and they offer you $125 for it so you can trade it into the new console. And you walk out happy, successful. But you also tell yourself, I'll never go back there again, and I hope they go out of business. Fast forward to 2021, GameStop is currently trading at $300 plus, and nobody but Wall Street Bets knows why the hell why. GameStop is a company that we all know and planned and foresaw them going out of business. It's not hidden. They were on the verge of bankruptcy. They closed like 1,000 plus stores. But somehow they are trading above $300, and again, we do not know why. Well, there is a forum on Reddit called Wall Street Bets, and one Redditor, which I can't name because I'll get this demonetized, placed an obscene amount of money betting on GameStop price going up, which this man was considered crazy, considered mad. Many thought he would go broke, but that man has the gall of Warren Buffett himself. I give credit to that man because he is now a millionaire 84,000 times over and has more money than I can possibly imagine. But why? So within the past year or so, with GameStop trending to go out of business, I repeat again, GameStop trending to go out of business, a bunch of hedge fund managers, which we could refer to as the top 85% of people who control the market, they were betting in that trend. Now, that's smart on the hedge fund managers' part. Nobody foresaw GameStop surviving in an era where you can buy your video game consoles online through other retailers. You can buy your games digitally. You don't even have to go to the store anymore to physically deal with them. Now, because you also don't have to go to the store, you also don't need to trade your games in, so GameStop doesn't make any money off of you anymore. Again, viable. There was no sense of understanding how GameStop would stay in business going further. So, a hedge fund proceeded to throw millions of dollars at GameStop going out of business. That fund literally said that GameStop would drop their stock price from whatever it was to damn near bankruptcy, making the hedge fund millions of dollars, maybe even billions. Understandable. This Reddit user decided to bet against the hedge fund, which shows tremendous, and I literally mean tremendous, gall. Upon doing so, he convinced, or I would say galvanized, the troops of the forum Wall Street Bets. All of these stock traders decided to now pummel their money into GameStop. That then shot the price up. Now, you may think of that as it's no harm, no foul, which, again, it's not. And I'm all for Wall Street Bet side. I'm all for it. But here's why this week became so controversial. Okay, so the controversy began here. Because you have Wall Street Bets and you have the big hedge funds betting against GameStop to see who's going to win, we, as regular investors, were caught in the middle. Whether you partook into it or you stayed on the side, here's what happened. So, the Wall Street Bets or funneling money into GameStop, driving the stock price up. Now, that's normal because by all means, that's the same thing that hedge fund managers do. They throw money at a stock and hoping to increase the price. They do it with every major stock you can think of. But because the hedge funds are betting against GameStop, that cost them billions of dollars. A noticeable hedge fund, I believe it's called Point23, lost $1.6 billion in the past 2 days. Yeah. But anyway, the Wall Street Bets Reddit forum, they decided to funnel money into GameStop and increase the price. Because it's the opposite of what the hedge funds are doing, they were losing tremendous amounts of money. Because one, they betted against the stock. So because you had that forum throwing money at GameStop and increasing the price, they not only had to share their shorts, meaning they had to share what they thought the stock would be at, which was undervalued company, so borderline $1, damn near bankruptcy. They had to then go back and rebuy the stock when it was skyrocketing from $3 to $35 to $90, all the way up to $314 on any given day. So now, because they had to do that, they were losing billions and billions of dollars. Now again, that's not the controversial part. The controversy comes in, I want to say, on what was that? Thursday? Officially Thursday. Because they had lost all that money, the big news that this week was that Apple, Tesla, Facebook, Microsoft would all be reporting earnings. 4 big blue chip companies that you think would be doing fantastically well during a period where people can't shop and are forced to shop online. Natural distinction says that, hey, those companies will perform well. Apple just released their iPhone 12. Microsoft has a variety of suits that are making money. Tesla, of course, the electric car company, apparently can't do no wrong in Wall Street's eyes. And Facebook, the ever so popular social media website. So those companies were supposed to report earnings, and those shares was a skyrocket. Natural incentive says that, yeah, that's going to happen. However, the big hedge funds had news otherwise. So think about it. You're investing millions of dollars, assuming that GameStop will not go out of business, and they're not. You're losing billions of dollars because the stock price is going higher to a price where you have to buy it to try and recoup your losses. And you try and sell, assuming that the other people who are buying the stock will also fear the loss of losing money. Reasonable. But, according to Wall Street Bets, they're going to hold that stock into the ground. Regardless of whether GameStop is making money or not off of regular customers like you and I, Wall Street Bets will continue to hold. But to get into the nitty-gritty, because the price of GameStop was skyrocketing, they were losing billions of dollars. Now, that doesn't sit right with them, so now you got to think, how are they going to recoup their losses? They're going to look at other areas of the market where they're doing well. So, again, to name those companies, Apple, Tesla, Facebook, Microsoft, Disney, if they're up making a profit there, they now have to find some way to get their profit that they just lost in GameStop. They're selling thousands, and I mean thousands of shares at a time. So, me, as a regular investor with logic, says that, I don't think that Apple will be too heavily impacted by this, because Apple's not GameStop. Apple is a publicly traded company to everybody, but it's not gonna feel the impact of this. Boy, was I wrong. Apple then proceeded to tumble after reporting its $100 billion quarter. Yeah, a $100 billion quarter where there were no Apple stores open. People were forced to sit inside and buy MacBooks. They were forced to buy iPhones, Apple Watches, every Apple product you can think of. They were forced to sit in their house and now buy because they couldn't go into an Apple store. Think about that. Apple reported a $100 billion quarter. $100 billion quarter. Their first $100 billion quarter. And shares plummeted. Because the big hedge fund said, we're losing money on GameStop, so let's sell where we're profitable everywhere else. So again, not the controversial part yet, because the controversy comes from the app that people can publicly trade on, Robinhood, or Webull, or whoever the hell else that you choose to trade with. So, in an attempt to control the market as they tend to do so. The big hedge funds spoke with Robinhood, they spoke with every other trading platform that you can think of, and said, do not allow traders to buy GameStop. Okay, that's not fair at all. Because by no means was GameStop a stock that had any insider trading. It was not a stock that had any negative publicity. They didn't do anything wrong. They were simply undershorted. Hedge funds were losing millions of dollars. And the way that we think of money as being fair was proven that this market isn't for everybody. This market isn't controlled by us. It's not run by us. And after this week, I don't think it's for us either. Because if we're winning and they're losing, they're going to do everything possible to make sure that it's in their favor. You can't make money, or we can't make money, unless they're making money too. And this week showed it. They removed stocks of GameStop, they removed stocks of AMC, they removed stocks of Bed Bath & Beyond, they removed stocks of Kodak, they even took down the Wall Street Bets Reddit. They took them down. Like, they took them off the internet. And to sit here after this week, having lost almost $800, I'm scratching my head because this isn't over. Robinhood, as we know, is being sued. They're sitting down talking about what to do about GameStop because, according to Robinhood, you still can't trade it even though the price after hours is shooting up hundreds of dollars. I cannot recap this week in this video, but I really hope today I tried. But in all seriousness, this was the most controversial week in GameStop and the most controversial week of the stock market that I know of. I can't imagine what's going to happen next week, but we'll be here to talk about it. But thank you for tuning in. See you next week. Market Watch Mondays. Thank you.